Hello, welcome to this week's Forex Review here at xm.com. I'm Rafi Bajian, currency analyst, and here with me is our chief economist, Michalis Orangelis. So Michalis, it's been a bit of a difficult week for the US dollar. We don't really have much key data out this week, but there have been few developments on the political front. Is that what hurt the dollar this week?
Yes, the dollar index is at a 1-year low, more or less. We had the weak data at the end of the previous week, specifically in terms of weak inflation and retail sales. But this week it was more political developments. First, it was the failure of the Trump administration to pass some sort of healthcare bill through the US Senate. It seemed to have lost the support of some key Senate Republicans, and the passage of the healthcare bill was seen as something that would help the administration to pass tax cuts and maybe some infrastructure spending. So if that's not happening, that's delaying the whole pro-growth agenda of President Trump. And also we have had this continuing investigation into Trump's and the Trump campaign's ties with Russia. It seems to be gathering steam a little bit. We will see whether this is going to be something substantial, because we have had these ups and downs in the investigations of Trump. So that will be definitely interesting. But a lot of people are reassessing whether the dollar is still in an uptrend. Maybe we are going to see a downtrend in the US dollar. So definitely weakness in the greenback, I think, was the main characteristic of the week.
Yeah, and we saw the Australian dollar powering ahead to two-year highs, and also the euro is approaching a two-year high. We did have the European Central Bank policy meeting yesterday. Many people were expecting some sort of a signal that ECB would begin in September its discussions on withdrawing its massive stimulus program, but we didn't really see much of a commitment from Mario Draghi yesterday. He even said he was rather vague. He said it potentially would be in the autumn, but despite the dovish stance, we did see the euro still powering ahead. So what would you explain that?
It was interesting, I think, because President Draghi said that the discussions could start maybe in the autumn, and we would probably potentially see some tapering next year if we put this time schedule, if nothing else goes wrong. So I thought that Draghi sounded a little bit dovish, to be honest, but it seems that the market had its own momentum. Maybe there was a lot of dollar weakness as well, and the euro is definitely attracting flows right now. The political uncertainties that were related with the euro at the beginning of the year seem to have cleared up. The economic data is good, and the ECB is more or less going to, well, not immediately, not this year, but eventually should start to tighten. So it was interesting that the euro dollar was at a more near two-year high, and it had broken above a range that had held so well in the recent past. But another European currency did not follow the euro, was not as strong as the euro, and this was the UK pound. And why don't you tell us a little bit about what happened with the UK pound?
Yeah, we saw
the beginning of Brexit negotiations.
Brexit was back at the forefront in terms of forex markets. At least we did see the weakness initially coming on Tuesday after UK inflation data disappointed on the downside. We saw UK inflation dropping from 2.9 to 2.6% in June, and this took some of the pressure off the Bank of England. At least we're not likely to see a rate hike in the next at least in the next meeting in August. On Thursday, we saw some better than expected retail sales numbers, but this failed to lift the pound. We saw the pound actually dropping to 1-week low below the 1.30 level. There have been some concerns that the UK could be headed for a hard Brexit. We saw the UK Trade Minister say that once again that no deal would be better than a bad deal. We've seen after the UK elections that the Conservatives had toned down that statement. They've been a bit more going towards reaching, some sort of an agreement with the EU. We saw at the start of the second round of Brexit negotiations with the UK and the EU. Again, we saw some comments from European officials saying the UK is coming arriving at the talks without being prepared enough. So this has appears to have unsettled the pound for the time being.
And I think we've had some indications from banks that they're looking to relocate part of their operations to EU countries. And also we are seeing a euro pound quite interestingly. I think it may challenge the 90 pence level, currently around 88. So if we see continued weakness of the pound versus the euro. What about next week, Rafi? What should we watch for?
Well, the highlight, of course, will be the FOMC meeting next Wednesday. We're not expecting any change, of course, from the Fed, but we may see whether or not other members will start to follow Fed Chair Janet Yellen in becoming more cautious. So if there are any signs in the statement that the Fed is a little bit more concerned about inflation, that could potentially weaken the dollar even further. We've got GDP data coming out of the UK and the US and also France, so these will be watched closely. We've got flash PMIs out of the Eurozone as always. They're a good indicator of growth in the Euro area, plus also we've got Australian inflation numbers and household spending numbers out of Japan as well.
Oh, thank you very much. It will be without a press conference, FOMC meeting, so just a statement next week. Well, thank you very much, Rafi. Thank you very much for watching and have a great day.